Welcome back to Investing with Confidence on this beautiful, beautiful Saturday morning. Can you believe the sun, Al? When is the
It's
last time we've seen the sun?
well, take a good look at it. Apparently, it's going to change a little bit. We'll have some snow here tonight.
Oh, I missed the
Y-
weather report. Thanks a lot for that. And Al, as we continue this discussion about these other assets like options, futures, and Forex, why people utilize them in their income accounts like the smart money does. That's why they are using those. They have
Mhm.
leverage and they are also open 24 hours a day. Now, in retirement accounts, those are also available as well. Because if you think about this, most people put all their capital at risk, put all of it in the stock market or mutual funds. And especially this past week, look what happened. All the markets went down. It was probably a pretty rough week for the average investor
There was.
that didn't know how to protect their accounts, but also were 100% invested because they probably all went down.
Mhm.
Let's talk about some of those different techniques and those different strategies that average investors can potentially use in their retirement accounts, plus using that leverage.
Sure. Well, this last week showed the importance of protection, and I think most people out there, when they hear that they can actually protect their portfolios, protect their assets, they don't know how to do it, and that's one of the reasons that they come into these classes. That's important, especially when you're in retirement. I mean, it's always important, but when you go into retirement and you've worked 30 or 40 years to put together something that you're going to rely on for maybe another 20, 30, maybe 40 years, you can't let that be taken away from you. And the market's not going to necessarily be kind to you all the time. It has been kind. People have done very well over the last few years, and I think maybe become a little bit complacent. But these markets don't always go up. There's what I call the what ifs. What if you retire and the market doesn't go up? It goes down. What if you retire and the market just is flat, is sideways? And those are times or years that you really need to have what you have in retirement continue to grow, but also provide some income for you. Because once you retire, as you know, your job is gone, the income from your job is gone. And a lot of people, that's what they have relied on pretty much for all of their, whatever their standard of living is. Well, is that going to change when you retire? Or is there a way that you can use what you have to maybe create some income and maybe to grow those accounts? And the answer is yes. And the answer is yes, regardless of which direction the market is going. But you have to understand how to take advantage of that. There are strategies that not only can be used in an up market to benefit you, but also potentially benefit you in a down market and a sideways market. Because when you go into retirement, it's not just having a sizable portfolio that you can rely on. It's growing that portfolio, it's protecting that portfolio, and using it as a way to look at that as your job. Look at that as something that can provide an income for you if you know how to do it.
Well, you have to learn the strategies though, right? I mean, it's not just knowledge, right?
Yeah,
You
you
got to
have
build the
to.
skill and it's not guaranteed, but if you have that skill, you've learned those different techniques and strategies to make better investing decisions. Wouldn't that help with confidence?
Sure. Yeah, and nothing is guaranteed, Josh, but you can do things to put the odds in your favor
Okay.
of potentially being successful. And that's what you want to do no matter what you're doing. You want to always make sure that whatever the positive outcome is, that you have the greatest opportunity of achieving that positive outcome. And for a lot of people that are in retirement or thinking about going into it, the old go-to was just put more money into bonds, put more money into fixed income. That hasn't worked over the last few years. So people have also really been forced to put their money into the stock market because that's where the returns or the potential returns were. But unfortunately, a lot of people did that not understanding what they were doing. And we talk about a retirement crisis. One of the problems here because of this pandemic is that about 14% of the people out there decreased their 401k contributions during
Yeah.
this pandemic.
Now they're behind.
Yeah, 15% decided they had to delay retirement altogether, and 51%, and this is according to TD Ameritrade, 51% feel they need a job to make it through retirement. And part of that problem is that they were maybe either invested in the wrong assets, they were paying fees that were too high that took a lot of what they could have when they retire, or they were just relying on somebody else to make decisions for them that maybe didn't do as good a job as they could have done.
Yeah, I like that concept of the what if, right? And that's kind of one of those things that are detrimental to people is they say, oh, what if this? What if that? Right. And then I think a lot of people just put their head in the sand and do
Sure.
nothing. Right. Now, if doing nothing, is that going to help you, get to your objective that you have? Right. Is that going to help you do that? Probably not. But action is that one thing that could potentially do that. And when you have action, then you got to apply it, right? You got to learn some skills.
Right.
You got to learn some techniques. When we're seeing a lot of people that are coming to these investment classes that have 401ks, have IRAs, or whatever type of investment retirement plan. There's a lot of them out there, right? We kind of classify them all as just retirement plans, right?
Hmm.
Now, people are understanding, okay, they can potentially take them over and manage them themselves,
Right.
right? And then make their best interest decisions, not their money manager. Talk about that translation of managing your own capital, but doing that with confidence.
Yeah, well, and that's a good combination. There's managing your own assets, but doing it with confidence. And the reason that a lot of people shy away from managing their own assets is because they don't have the confidence. They're afraid. There's a fear there that they might make a mistake, that they're not going to be right all the time. And that's again one of those fallacies. You don't have to be right all the time. If you have a strategy that is structured properly, that it really addresses the reward risk ratio part of investing and trading, then you don't have to be right 100% of the time. You don't have to be right even 50% of the time and have the potential to be profitable. And those are the things that we show people. We teach them how to approach the markets with the right reward risk ratio, how to do it in a way that you don't have to take large amounts of whatever assets you have. Like if you're in retirement and you have money from a 401k or 403b, the fear there is that, well, if I take a lot of that money and I invest it, what if I lose it? Well, what if you could just take a small amount of it and still control a large individual asset or individual investment? That's using these leverage assets in your retirement accounts, but you have to do it with risk management. That's the number one thing that we teach you. You talked about skills. Well, it's more than just knowledge. It's having the skills to use the knowledge. And that is something that is learned over time. That's not something that people are born with. You can't just read about a skill and have it. You have to practice it. You have to learn it. You have to make it part of your behavior. And that's really part of our education process, is building those skills. A lot of people, when they put their retirement money in the market through their 401k or 403b, really are just putting it on cruise control. Most of the people really have no idea what's in their 401ks or their 403bs, why a particular asset was chosen. And by the way, who chose those assets? You did.
A stranger probably persuaded them to.
A stranger gave them these choices
Yeah.
and said, here's some choices. Now you go ahead and you make the choices. And then they charge you for giving you the right to control your own
Talk about
assets.
a great model.
That's why if you want to set up a self-directed IRA or a self-directed account of some sort, you're already making your own decisions. Now you can do it without the fees that you're paying, and you can do it with many more choices. With a self-directed IRA, whether it's a traditional IRA or a Roth IRA, you can choose assets that will benefit you in an up market, assets that have the potential of benefiting you in a down market and a sideways market. You can have that protection I talked about, essentially an insurance policy on your portfolio. But just eliminating the fees alone can have a huge impact on what you have in retirement and maybe how long you can stay retired.
Yeah, I just want to double down on something you mentioned there that I think our listeners heard, but maybe didn't understand. When markets are up in retirement plans, they should go up. That's the way it's designed,
Correct.
right?
Mhm.
Probably not the same as the underlying or the actual market, but they're supposed to, right? As markets go down, if you're listening right now, what happens in down markets?
Sure.
Retirement plans go down. Now think about this. In retirement plans, what happens when the market goes sideways? People think, oh, I just break even. Well, you actually lose because you're still paying
Correct.
fees
Yeah.
for someone to hold or just have your money sit there. Now think about this. If you had the opportunity to self-direct your own accounts and potentially eliminate those fees for one, but being able to participate in those down markets that benefit you
Right.
and not your broker. Now think about that. What could that do for you? How could that make you go into retirement with more confidence, right? and we have a retirement crisis, would that help you be not part of that, I guess, that percentage, right?
Sure.
Coming up next, we'll mention fees, right? I want to continue that discussion about fees and some different alternatives people may have in their retirement accounts to potentially lower or eliminate those fees. We will be right back.